Welcome to the Young CEOs Mastermind Call. Once again, we host these on Tuesdays and Fridays at 6 p.m. We're going to be going over some interesting information today regarding stocks. Every Tuesday and Friday, we host these calls for the young CEOs discussing financial topics. This is a group collective atmosphere where we can come together and talk about financial matters such as stocks. Some of the other previous calls that we had, we teach our students how to build credit, but then we teach them how to leverage their credit by investing in other avenues. So being able to invest in other avenues such as Turo, taking a vehicle and renting it out and listing it on Turo, or utilizing the stock market to gain annual percent interest on your capital. So you can do that method with utilizing the funds that you get from utilizing your credit to leverage. So you can get access to other streams of income, because the idea behind the young CEOs and the idea behind investing is to create financial freedom, to the point where your money goes out and it brings friends. It creates more income. So with that being said, you can take your current capital, invest it, and receive gains on that capital, utilizing the stock market. So just diving a little bit into stocks and investing, for purposes of having other streams of income. We do have, as it is said, the average millionaire has about 7 streams of income. So they diversify their portfolios. They have real estate, they have stocks, they may have cars listed on Turo, they may have other businesses that they invest in, like brick and mortar businesses, but reverting back to that statement that average successful entrepreneurs, millionaires who have reached that milestone, have been able to utilize at least 7 streams of income. So the first thing I want to start off with is how to start investing in stocks. Now, this is something that was also dropped in the Young CEO chat. So understanding what a stock is and how you can invest in a stock using webull. So like I said, I use webull. I dropped that link in the chat. You guys can actually go and get a free stock and create a watch list for these specific ETFs. So you can see for yourself what the price of the shares are, how they're performing, how they performed for the last few years. I'm just going to show you guys real quickly the webull on my phone, because you can actually access this. You can download it on your phone. So you can actually, do this on the go, right? You can invest in ETFs, you can invest in stocks, you can do this on the go, which makes this so convenient for the average individual as well. And we can all participate in this together. This is another thing. We can all participate in this together. So as my stock is going up, you guys' stock is going up. It performs the same over the industry, right? So with that being said, this is just webull here. These are a couple of the ETFs and things that I have on my watch list. If you guys can see that, you can screenshot it, do whatever. But that is a couple of just ETFs. I have a bunch of stocks and ETFs here, on my watch list that I'm watching on a consistent basis. When I hear different news come about, news very dramatically affects the market. As you can see, when it came to Tesla, Elon Musk had made a couple tweets, boom, Tesla's share starts fluctuating, right? He made a statement about not accepting Bitcoin from Tesla, right? So you've seen Bitcoin's price go way down. Why? Because he also mentioned that it was bad for the electricity. It was utilizing more to what people were doing was mining the Bitcoin, right? So it was costing a lot of extra electricity to do this procedure, which is why Elon Musk had made a tweet. And, I believe some of it was to divert people to utilizing Dogecoin, which he was heavily promoting. But as you can see, what a simple tweet can do for the market, Bitcoin's price went way down after he made that tweet. A lot of people pulled their money out because that's what's happening when share prices are fluctuating. People are either buying or they're selling in the market, right? So if you see a big chunk of individuals pull their money from the stock market, or pull their money from a certain share, you can see that share price take a massive amount of fall or a massive gain, right? Depending on what the collective amount of individuals did according to that stock. If a lot of people bought in, then the price will go up. A lot of people went to invest in GameStop, AMC. There was some heavy news about these certain individual stocks that people capitalized on just from hearing news, right? So, news is a way to gain from the stock market, but a lot of people look at actual, statistics, and that's what we should actually do. Look at actual statistics, backtrace those stocks, see how they performed in the last year, 5 years. Even if you're investing short term for the day, look in the last 30 minutes. But history plays a key part and a key role in being able to read what the stock market is doing, right? Another key thing that we look at is support and resistance lines when it comes to stocks. Support and resistance is also known as the top price and the bottom price within a time period, right? So the top would be the resistance and the bottom would be the support. So within a time frame, you're looking for the highest point and the lowest point of that time frame, and it can kind of gauge, and you can see, well, okay, so it ranged from $100 on this date, and it dropped down to $50 on this date, and vice versa, right? So being able to track this process is going to give you key information on how the stock is moving, right? And then how you can invest in it based on, is it at a high point or is it at a low point during this time period? So that's some more stock information as far as how you would go about investing in a stock. And there's more strategies that people utilize, but us as investors in ETFs have a lot less to worry about when it comes to picking the high point and low points of the stock market, because we can actually set it and forget it in a sense, because it gains that average yearly return of about, anywhere from 10 to 17% on average. So, that's how the market has been performing for the last 30 years. So, who's to say that's going to change, or who's to say that is going to go anywhere at all? Right. So that's a form of investing in stocks. So number 2, you want to get a free stock and begin to watch your list, right? So utilizing that webull platform, you can actually get your free stock by signing up. You're going to get a free stock when you download webull. Now that stock could be anywhere from to like $100, right? So it's a free stock. You can utilize that to either cash it out right away, or you can take it and allow it to grow, right? It's a free share of a company, right? You could get a share for Microsoft, or you could get a free share for Apple. Let me know what free share you get when you download the webull app, utilizing that link in the chat, right? Because you have to be referred by somebody else in order to get the free shares, right? So with that being said, utilizing webull, getting your free stock, and then taking that free stock and using a watch list to kind of keep track and keep tabs. And then you can dive in and get more familiar with the webull platform, which is going to allow you to have more smarter investments. You can place different term trades, right? You can set profit take profit and stop loss orders in the market. And this is something that, we can do collectively, or, do research on collectively, where, we can place certain trades together, right? So the price is going to fluctuate when it comes to investing in stocks and ETFs. The price is going to fluctuate between high and low, which is why we set those take profits and those stop losses. When we take profit, we're setting a certain limit. Okay, let's say we bought a share for $20, right? In order to set it and forget it when it comes to one share, because that share could potentially go to $0, it could potentially go to, 2 times, 3 times, 4 times, 10 times as much, right? So in order to capitalize and create a low risk trade, a low risk investment, we can actually set a stop loss. So what a stop loss is, let's say that share was $20, we can set a stop loss at $18. So if the price fluctuates on that share for $2 down, it's going to immediately cancel us out of the trade, right? So we were only risking $2 on that trade. So that's how we're able to place a stop loss when it comes to the stock market, being able to automatically pull us out of the market when the share price reaches a certain amount, right? Now, there is a take profit as well. You can actually take profit in the market. So you can set your take profit, let's say, because what happens, like I said, is the price fluctuates up and down, right? So the share price could go from $20 to $30, but then it could drop back down to 20, right? In order to keep our profits, we can set a take profit, a stop point. So let's say our target is for $30 for that share price, right? So we can see it gradually increasing. It goes from 20 to 23, 26, 27, and it's getting close to 30, right? And we know from support and resistance previously that it could potentially reach $30. So we set a stop loss or a take profit at that $30 mark, so that whenever it's going straight up to that $30 mark, it's going to immediately take us out of the trade at $30. We're going to take our profit and be good, right? Now, if it hit $30 and went back down to 20, we didn't stay even. We actually took our $10 profit. Even though the price share dropped, we kept our profit because we took the take profit, right? You're able to set a stop loss order and you're able to set a take profit order. So you can set the price of how much you want to lose and how much you want to gain, your target price, according to your purchase, your initial transaction. You want to place all those details in your initial transaction, and there's a method to do that, right? There is a take profit and a stop loss on webull, so you can utilize that, and we'll get further into that. We're just demonstrating the different types of investing in stocks. Not only that, but what and how, what platform to use and how. So the market is not 24/7 in most cases. You can set a good till cancel order, which means, it's going to perform over the 24/7 period of the stock market, because what happens is you can only place an order in the stock market from a certain time to a certain time, right? Usually it's about, I think it starts at about 6 a.m. and it ends at about 6 or 7 p.m., right? So, with a whole day's worth of trading, you're actually booted. You can't trade past certain hours of the day when it comes to the stock market. That's why a lot of people like foreign exchange in a sense, because you can actually trade 24/7. Now, foreign exchange is a completely different thing. That's investing in currencies rather than investing in companies, which is what the stock market is. So this is not 24/7. In order to place 24/7 trades, you can take profit, stop loss, and a good till cancel order, which means the length that you have that trade is going to be overnight. It's going to be good till cancel. But if it hits the take profit or the stop loss, it'll pull you out as well. So those are key factors when it comes to stocks. It's not 24/7. So some stocks pay dividends. We going over that about 3 to 5% per of the share, and that's per quarter or annually. So we went over that, and also you can create what is known as capital gains from stocks. And if in an IRA account, those capital gains are not taxed, right? So you can grow your money tax-free. This is how the wealthy are wealthy, avoiding taxes, right? The highest tax is earned income. So, utilizing businesses and other key factors is going to allow you to take advantage of taxes. Now, putting your money in an IRA, investing in stocks that way is going to allow you to also utilize a form of tax deduction, right? So because you're not being taxed on the gains, right? So with that being said, that's what investing in stocks is in a nutshell. Once again, my name is Andre Kennedy, aka Investor Gadget. I hope you guys have a blessed evening. This was a little more information on stocks. So I hope you guys have a blessed evening. We're going to continue to host these calls Tuesdays and Fridays every week, 6 p.m., rain or shine. This is the community that I want to continue to have. I love individuals reaching back to me, telling me that, they were able to gain information and knowledge from these videos. So we're going to continue to produce them. With that being said, tell your friends, tell your family members, hey, I have a friend. He's hosting calls Tuesdays and Fridays. He's going over financial topics. I believe this is going to be good for us to be able to educate ourselves when it comes to finances and where to place our money, because, a lot of people are struggling, especially during this time. The recession took place. People weren't able to recover. So we have information that you can actually utilize to take and apply to your life so you can actually gain more streams of income like the average millionaire. So with that being said, family, my name is Andre Kennedy. You guys can follow me on IG at InvestorGadget_. Follow me on IG at InvestorGadget_. This your boy and Young CEOs. We turn this thing up. Let's go.